Welcome to the Fish and Coach Show. My name is Brandon Fisher. This is Coach Ratner. Today we're going to look into the secret to time the stock market. Coach, I don't trade so much, but it is because I'm scared about missing the right moment. How do we know when to time it?
There is a secret to time the stock market, and here it is. You ready? You can't. That's it.
There you
Show
go.
over.
Thank you for watching.
Right. Thank you for
Coach
watching.
Show.
Very few of us have the nerves what it takes to trade in the stock market. And people say, if I buy low and I sell high, the problem is that we are emotional beings.
Sure.
We have some intellect, but we're not computers. And we get so emotional. It's so hard. It's so hard for us to buy and sell on the daily. People want to be day traders. But you know what? I think most of them don't make money.
Really?
Yeah. Because really the only way that you can make money in the stock market on a consistent basis, if you buy companies that are growing,
right,
and you buy them and you hold them for a long time, not trading.
Interesting.
Yeah, because most people that trade miss the best days of the stock market because their emotions get in the way. This is why, because I'm an emotional person. Like, you don't know that, right? I'm an emotional person. Thank God I'm happy. But that's why I stink at trading. Obviously, Fish, you're a calm guy. You're probably really good at trading if you traded, because you're a calm person. You let your emotions get in the way. This is, by the way,
I do my best.
Huh?
I do my best.
This is why it is never wise to make any decisions when you're emotional.
Interesting.
I have in my marriage book, The 10 Secrets to a Passionate Marriage, that you have something called the 24-hour rule, and that rule states that when you're about to get mad at your spouse, you wait 24 hours until you engage them with that problem. Do you know
Coach,
why?
But they say you don't want to go to bed angry.
That is completely false.
Oh, yeah?
Better to wait, and then 24 hours later, you go talk to your spouse about it, and guess what happens?
You won't care about it anymore.
You won't care about it anymore. I know what most guys are saying. You know what? I can't wait 24 hours. You know why? Because I'm going to forget about it. That's the idea.
Oh.
When you wait 24 hours, you're not so emotional.
How much did it really matter?
It really didn't matter. But when it comes with my kids, like when they're upset about something, you can't. I always say you can't negotiate with an emotional person,
right?
Because you don't make poor decisions. This is one of the reasons why, if you've ever been on a cruise ship, they sell. You ever been on a cruise ship?
I've been on quite a few.
Yeah, I don't know if you know, but you probably haven't seen this, but they sell art on cruise
Sure.
ships, right? You know why they sell art on cruise ships?
People are having a great time.
People are having a great time. They're happy. Emotionally, they're very in a good place. And when you're happy, you're more likely to open your pocketbooks and your checkbooks. Oh, we'll just put in the credit cards. Look at this beautiful painting. It's only $1,500, $2,500. Let's buy it. Of course, artwork has huge markups. The artist probably gets 10% of that, and
right.
the cruise ship makes all the money. And there's another reason why when you go to ports of call on cruises, anytime you're in a good mood, the stores you're going to see are going to be like jewelry stores, things that are high, art stores,
right.
Sometimes knickknacks, because these are all high markup items, and they know when you're happy, you're more likely to spend your money. We are emotional beings. That's what we are, right? This is why the guys who are the most intellectual and don't have a lot of emotion can sometimes make the most money if they are going to be traders.
Interestingly, it seems like the art that we buy on those cruise ships or at those ports ends up even feeling more valuable to us because of the sentimental value that comes with it.
Only for a few years.
Only for a few years.
And then after 4 or 5 years, why do we buy that ugly shark head in Montego Bay when we don't really like sharks and it's really ugly, but we were in such a good mood? Like, oh, look how good this would look on our living room wall.
Sure.
And then it ends up on the garage sale you're selling for $2, right? That's what happens.
Yeah. Because
you're emotional when you bought it.
I guarantee the guy who bought it from the garage sale is not putting it on his wall the way you are.
Probably reselling it, right? You should never buy artwork on vacations. Now, there's a number of reasons why the market goes up and down. Do you know what they are? There's 3 of them. I'm going to give you 3 of them.
Okay, tell me.
Okay, so the first one is herd mentality. And sometimes I have this mentality. We all do. In fact, I think Bitcoin, by the way, we have a podcast called Bitcoin, Gold, and
Sardines.
That's right. That Bitcoin might be in this mentality that people feel like they're missing out on something. And so they jump in with maybe they do know why they're buying it, but maybe they don't know. They just don't want to miss out. It's called. But it's called they don't want to be left behind. They feel like, oh, everyone else is making money, so I want to make money.
It's a bandwagon.
It's a bandwagon.
Sure.
So they buy things because prices are going very quickly and they don't want to miss out.
Right.
That's called herd mentality. The second is called happens every quarter. A company puts out called quarterly reports, and it has to do with how the company's doing, how their growth's going, how their profits are going, how their sales are going, and they always put out a future pick, like pick. It's not a pick.
No, prediction.
Prediction about what's going to happen in the next quarter or the next year, and that sometimes can affect the price of the stock.
Or they'll release a new product right before.
Oh, a new product. Yeah, Apple always does that. In fact, a recent quarterly report was from Zillow. Zillow is one of the companies that I own, and the reason why I bought Zillow along with Open Door and Redfin is because I believe that real estate is one of the most. I like things that are efficient. We've always talked about this. One of the most inefficient things in the world right today, and it's a $2.6 trillion industry that's completely ripe for disruption, which means we're still buying and selling houses the way we did 50 years ago.
That is so interesting.
You ever thought about that?
No.
I still find it crazy that like when you want to, when you buy a house and they change the name in the county register, it changes the name from the previous owner to your owner, that it still takes like 3 months. Like it doesn't. It's not done automatically. Like what is this? Like 1972 or something? Like what's going on here?
That is crazy.
It hasn't changed, and so I bought these 3 companies because they're all trying something called iBuying, which means they're going to make you're going to be able to go onto. You can right now in a number of cities with Open Door, and I don't know about Redfin, but Open Door, and you can. And Zillow tried this, and you can go to your house, get an offer right there on the spot, and within 2 or 3 days, they'll confirm the offer, and you can pick your move-out date, and they just put them on your account, and they do all the repairs. You do nothing, and they buy your house, and you can also buy a house that way.
It sounds a lot like what's that car vending machines that they have now?
Car vending machines?
Yeah, the car vending machines for used cars.
I know they have pizza vending machines in Italy, but I haven't heard about car vending machines.
I haven't heard about pizza vending
machines. Yeah, they have
That's
one in Italy. It was so cool. I'm like, I want one of those in my house. The guy invented one, and it actually makes a pizza.
I think it's Carvana.
It's a vending machine?
It's I don't know if it's Carvana. I wish I got this correct, but they have one in Rockville or near Rio.
In Maryland?
In Maryland, and it's a giant vertical parking garage for cars. And you choose your car, and the car will be like distributed. And
I have never heard of this.
Yeah, you have a week, I think, to try it out, and you can return it if that's the case. But
that is so cool.
Yeah.
Of course, you pay for the convenience, but you know what?
Sure.
We like convenience.
You're not negotiating with the salesman.
That's the scary thing about buying cars or buying houses. We have to negotiate. We have to hire a lawyer. We have to hire an inspector. We have to have a move-in, move-out date. We have to fix things. We have to go through the inspection report with an inspector. It's really so much involved in buying a house. And so I'm getting bogged down here on Zillow, but the idea I want to tell you is that Zillow came out in their quarterly reports and said we are getting out of the iBuying business.
We're getting out of,
which is the reason why I bought that stock. It's a good company anyway, but I like to buy stocks that can go up 50 to 100 times in value. Okay. And at this point in time, without iBuying, the chance of that happening is unlikely. So I sold it.
Okay.
Because the reason why I bought the thesis changed on why I bought that company in the first place. So therefore, because of the quarterly report, first we have herd mentality, the reason why the stocks go up or down. The second is quarterly reports, and the third is news.
Okay.
News can include many things: the interest rate, inflation, the Taiwan-China conflict, if there is one, employment, government spending. If a Jewish person in Jerusalem puts up a swing set in their backyard and the Arabs don't like it, then that changes. There's lots of things that can change the price of stocks.
So you got geopolitical,
right? Right. So the one thing that I want to get across to my listeners is I want to teach you things: the daily swings of the stock market are irrational.
Wow, they're irrational.
They mean nothing.
Meaning that they're not based on the value of the company.
Correct. They're based on many other things that may not have to do with the company. Doesn't mean it doesn't. Sometimes it does. Like I said, I make generalizations, but there are exceptions. There are times when there's a reason to sell a company because of some bad news.
Right.
But usually accounting scandals, things like that. But in general, if you buy a company that's growing, it's funny when you look at if you take a stock like Amazon, for example, and you look at a chart from a week that had a bad week, and you see the stock going like this with a downward movement, it looks scary.
Yeah.
But if you take that chart and bring it out 10 years, what happens to that 1 week? You don't even notice it on the stock chart. All you see is like this. You see it's like this. going up and up and up and up. But there's these weeks that have horrible weeks.
Right.
But in general, if you have a growing company that has a passionate owner, that has a large runway for growth, means that its market's expanding, and maybe has software that no one else has, maybe has a big moat, which means that it's hard for another company to get into that business. You're gonna have over the long term, not the short term, especially not a day trying to time the stock market.
Right.
You're gonna have a company that is gonna go up in value.
So, Coach, what is a reasonable period of time to look at when analyzing a stock to invest in?
If I had to sit to analyze a stock or to analyze how you've done on buying a stock.
Let's say before you buy the stock, you're looking to buy a stock. Maybe
I have a lot of reasons. This is a whole podcast, but we'll touch into this. Touch into this. So first off, how to determine if you bought a stock, whether or not you think you made the right decision.
Sure.
If everything is equal, which means if the thesis why you bought the company has stayed the same.
Okay.
I would say 3 to 5 years at a minimum, but sometimes it's longer than that. I bought Nvidia in 2010 or 11. I don't remember exactly. Nvidia is a chip stock. It could become one of the most valuable stocks. It might be getting close to $1 trillion.
Still.
I think I bought it when it was worth $10 billion, $5 billion, and I was trading it, and I was 10, 12. I thought I was a genius. I bought a stock for 10, and I'd sell it for 12. And sometimes I bought it for 12, and it went down to 9. I sold it because I was scared. That's how smart I was.
Yeah.
So if I had held Nvidia, I don't know, it's well over 100 times that price now.
Wow.
Well over it. And it took many, many years. It was 2010 or 11 or 12 when it was like $10 a share. And then 2015, it was like $20 a share. In 2018, it was $30 a share. And suddenly, since 2018, it's gone to well over $1,000 a share.
How many shares do you have?
I don't have any right now.
Oh, okay.
Because I wasn't smart enough to realize I wasn't a smart investor.
You have to be so patient. It's all about the long game.
So the idea about trading, if you're young, I hate to say an idiot, but you're not an idiot. You're young. You can't see long term. You can't see the idea. It was called compounding and exponential growth. It's hard to understand the whole idea of compounding. If you take a penny and you double it every day for 30 days, how much do you get?
I guess you have.
Do you know how much that is?
No, how much?
You know what it is? It's
No.
like a $1.4 million. No, or $14 million. Whatever it is. After 37 days, it's over $1 billion.
Wow.
$1 billion. Wow. Over $1 billion if you take a penny and double every day. That's called the power of compounding. In fact, I think Albert Einstein called it the 8th wonder of the world.
Is compounding?
Compounding.
Oh, interesting.
Compounding interest. Now that's something. So when you have a company that's growing and compounding itself, which means growing 20, 30, 40, 50% a year, maybe not doubling, but going up a lot, you buy and you sell it, you miss out on that compounding. Because what happens is your emotions get in the way. You own the company, you love the company, and it goes up and it doubles in price. It doubled in price, I'm doing really good. I'm going to sell it, take my profit. But you don't realize it can double again and double again and double again and double again. And you missed out on that massive compounding ability by trading stocks. This is why the secret to time the stock market is not to time the stock market. The secret is not to do it, is to invest in companies with long-term growth and keep them. Hope you never have to sell them.
Wow. Keep them long-term.
Right.
So, Coach, now isn't it possible for someone who's more skeptical to say that the stock could go to zero?
It can, for sure. There are companies that you can buy that will go out of business.
Okay.
But if you're investing all your money in one company, you're making a big mistake.
So diversity there.
The diversification is the key when you're starting. You want to have at least 25 different companies, at least 25, I would say 25 at a minimum, 25 different companies, because some are going to do, all you need is one or two of them to do fantastic, and the rest of them can be marginal. You can even lose all your money on a few of them, doesn't matter. And this is the key I teach my students. What is the most money you can lose in an investment?
100%.
All your money.
Paid.
So if you put $1,000 into a stock, what's the most you can lose?
$1,000.
What's the most you can make on an investment?
It's unlimited.
It is unlimited.
That's a good point.
Do you understand the idea here? That if you invest in growing companies and you keep them for a long time, you can start to see the power of exponential growth and compounding. I was at a board meeting in 2014 back in Rockville, Maryland, and one of the board members had bought a brand new Tesla. Okay. And I went and looked at it. It was an awesome car. It was so cool. And so I went home and I bought 100 shares.
Nice.
$30 a share. still paid $30.
Okay.
And I didn't really. I had like so little money in it. I didn't care. Which was probably better because if I had put like, I think I put $3,000. If I had put like $30,000 to it, I probably would have sold it much sooner because it'd been a lot of money. Since it was such a little amount of money, I didn't care. And because of that, I ended up selling it about a year ago for like $2,350 a share. And since I actually sold half at $200 a share. I kept the other half. And if I kept it another year, it would have doubled again. I think to myself, oh my God, it's gone up so much in value. I have to sell it. And then a year later, it's doubled again. Is that crazy?
That's
You have
insane.
to ride these things out. You have no idea what's going to happen.
But you are teaching a valuable lesson, though, that it is also, if you're comfortable with that 100% increase, and
well, you're a trader then. You're not an investor.
It's crossing that risk. Then
you have to have clear. Well,
no?
I always say, why am I investing in something? Am I a trader or am I an investor? If I'm a trader, fine, trader. I hate to say you're going to end up losing, most likely. I hope I'm wrong. I hope you make money. I'm not rooting against anybody. Right. I just look at things from my perspective. Now, if you're young, it's hard when you're making money. I know when I was a coin dealer when I was young, I loved the feeling I get by making a quick money. Like it feels so good when you buy something for $100 and 3 days you let it sell for $200. Mm-hmm. That's a great feeling. It's almost like running when you get the dopamine and the serotonin. It's like free drugs, right?
Yeah. You
feel great about it. But if you miss out on that exponential growth, which can happen in 5, 10, 15, 20 years.
Coach, think about it for someone who's young, the decisions we have to make when we're in our young 20s are, where do I want to live for the rest of my life? What do I want to do for work for the rest of my life? Who am I going to marry for the rest of my life? All of these things are very long-term decisions.
Yes.
So we want that quick dose. That's the same thing why dating versus marriage is so much more popular in the 20s. People are getting married late. We want that quicker stuff.
We do want that quick stuff. And I want to get another idea across. This is very important. Have you ever heard of stock tips? Like people get like, hey, you should buy this. I hear it all the time. People give you stock tips, especially when you're younger. Stock tips. And you buy the stock. And the next day you buy the stock. Next day it goes up. How do you feel?
Great.
You feel amazing. Look at me. I'm smart. I bought the stock. It went up today. I'm a genius. Look at me. And what happens if it goes down the next day?
You feel pretty bad.
You feel stupid. Right, you know why? Because you have no idea. The only reason that you bought the stock because some guy that actually has no idea what he's doing said you should buy the stock, right?
I had a bunch of GameStop.
Right.
Got in a little late.
He had no idea what he's doing. And so because you don't have a basis why you bought it except some guy told you, there's nothing holding on. We talked about it with Bitcoin, like what's holding on to the value of something, what's holding the value of gold and dollars and things like that. I know when I buy Trade Desk, I know that it's a growing market. Trade Desk is one of my favorite stocks, and it's had some wild swings. It's gone down like 25% in one day. Wow. It's crazy. But I know the reason why I bought it. It's in the digital advertising business. Okay. It has a passionate owner who is not looking for short-term profits but sees the big picture. He puts all his profits back into the company. They are a hugely growing market. More things are going digital. Wow. And they're going to be a huge company. And when it goes down 25% in a day, does it hurt? Yeah, it does hurt. But I know I didn't make a mistake because I know why I bought the company. Unless there's a change or something, like a major change where there's a laws changing or something if there's no major change in my thesis, I'm going to keep it. I'm not trading that stock. I want that company to keep growing and growing and for me to be flying my G4 to the Bahamas, eating pita chips and salsa on the beach for my Trade Desk stock. That's what I want to do.
Sure.
Right?
Yeah.
That's what I'm looking for. Because when we start trading, it's emotionally hard. When we sell something, thinking to ourselves, you know what? It went up. I'll buy it when it goes down. Guess what happens? It goes down 30% the next day. You're like, oh my gosh, it went down a lot. What am I going to do? I can't. It's scary now. Now it's going to another 30% tomorrow, and you don't buy it. Or it goes down and goes back up. Like, oh my gosh, it went back up to what I sold it for. Oh, I should wait till it goes down again. And then it goes up 50% the next day. Like, oh, it's too late now. I missed the boat. And guess what? You never get back in, and that company takes off. Do you know how many stories I hear about people telling me? I have a guy told me a story about Mercado Libre. He said he bought it when it was like, he was trading it between $12 and $20 a share, or $20 and $30 a share, something crazy. He sold it for $60.
Okay. And
Mercado Libre is now hit like $1,800. It's like $1,300 a share. He sold it for $60 because he was making double his money. $1,300 a share. You know how much money he left on the table? Because he had the mentality of a trader. He thought he could time the market. And guess what? You can't. We are emotional people. We can't always make decisions. This is why they have something called quant trading, which is just computers that are trading. They don't make mistakes because there's no emotion there.
Incredible.
Computers don't have emotions.
Wow.
Right? So we learned a lot of stuff today.
Yeah.
We learned a lot of stuff. We learned that there's 3 reasons why I'm sure there's more reasons, but these are the 3 I'm giving you. The more reasons why the stocks go up and down on a daily basis: herd mentality, quarterly reports, and news, which can be, you said, was geopolitical reasons, right? And we understand also that when you buy stocks and you trade them, you're missing out on compounding and exponential growth. And we also learned that really you can't time the stock market because we're emotional beings and our emotions get in the way, and we don't make the right decisions. And we have one more thing I want to mention.
Okay.
One is sometimes we get anchored down to a price. You know what an anchor is?
Pulls down.
Pulls you down.
Yeah.
So like you have a boat and the anchor falls down from the boat and it keeps you in place.
Right.
So when you get anchored down to a price of a stock, and you have a hard time and it goes up or down, it changes your mentality. Like, no, if it's supposed to be $50 a share, it goes to 100. I'm not buying anymore. Or sometimes the best stocks for you to buy are the ones you already own. And you're afraid to buy more because it's now beyond the price that you're used to it being, and you get anchored down.
Right.
So the secret to time the stock market is you can't.
So it sounds like you have to have a thesis for the stocks. You have to have a thesis.
Right.
For every stock you own, an understanding of why you're buying that stock versus this other one. And it's not about when, but it's about just owning it and holding it on. Is that the right?
That's the key.
Sums it up?
Yeah.
Okay.
All right.
Amazing. Thank you for listening to this episode of the Fish and Coach Show.
I'll see you next time. Thanks for watching the Fish and Coach Show.
If you like what you just watched, make sure you like, subscribe, and comment with any ideas you'd like to see on any future episodes.
We'll see you next time.